1 year ago, I started my series of potential multibaggers here on Seeking Alpha. The title is self-explanatory. I look for stocks which I think have the potential to become multibaggers over the long term. The over the long term part is extremely important for me. I am a growth and value investor, hence my pen name, and I don't mind that my growth stocks drop like a rock every now and then. I always keep my stocks, unless something really fundamentally has changed. Market sentiment and momentum are not part of the fundamentals for me. A stock can underperform for a few years because of a sector that is less popular or one or two pundits who feel that the stock is overpriced, but I don't mind that at all. I look at the underlying part, which is sometimes forgotten, especially by chart readers. With all respect, by the way, the company itself and its place in the new developments that point to the future. Over the long run, which can mean decades of buying and holding, this is the most important issue. Sometimes a company invests heavily and that can be at the expense of profitability. Over the short term, this might bring down the stock price, but most often, if the investments make sense, over the long term, this is a boost for the stock price. Shopify, the first potential multibagger pick a year ago. When I started the series of potential multibaggers, I picked Shopify Shop as the very first stock. I believe in the stocks I write about in this series and have them all in my real personal portfolio. If my investment thesis plays out, I add to winners, and sometimes to high-conviction losers. It is counterintuitive for most investors to average up. It was for me too in the beginning, I have to admit, but that is mostly a better strategy than averaging down. Beware of the word mostly. As in life itself, there are no eternal truths in the stock market. Since I have picked Shopify a year ago, the stock has done very well. Shop data by YCharts. As you can see, Shopify's stock performance was quite volatile, but overall it beats the S&P. The volatility is typical for most stocks in the series of potential multibaggers. Mostly these stocks have a high growth profile and often a lot of growth has been calculated into the stock price. When investors' sentiment turns somewhat sour, the traders in these stocks want to secure their gains and sell quickly, which can cause huge drops in the charts. You can see a few for yourself in the Shop chart. Still a good buy? I think most of you who have clicked on my article, thanks, have done that to see the answer to this question, so I am not going to hide it somewhere at the end of the article. Is Shopify near all-time highs still interesting? A lot of investors just look at the numbers. And those are not rosy for Shopify. There is a negative P/E, a forward P/E of 260 and a P/S of 20. I'm pretty sure these numbers will prevent a lot of investors to ever consider taking a position in this stock. But I am regularly adding to my position and plan to keep doing that for the foreseeable future. Why? Well, as in life, in investing, not everything comes down to numbers. Yes, of course, Shopify has a big premium on it back, which could be the reason why it drops a lot if there is some sort of setback. That was the case at the end of March and the first half of April, when the stock drops 23.6% in just 3 weeks after the Facebook, Nasdaq, FB scandal with Cambridge Analytica, and analysts and shorters like Andrew Luft shouted out that this scandal might impact Shopify as well. The stock is almost back at its peak now, but these kinds of drops could happen again. Shop data by YCharts, but over the long term, Shopify has got a very interesting trend behind its huge growth engine. I have been reading The End of Jobs, a very interesting book by Taylor Pearson. In his book, the author shows that we are in a new age. After the century of knowledge, we are in the century of the entrepreneur. Since 2000, millions of manufacturing jobs have been lost in the U.S. Source, CNN, but there is another evolution going on. More and more jobs which require skills such as computing, design, accounting and other white-collar skills are being outsourced to new economies such as China and India. Those countries have a huge number of people who have high degrees but are willing to work for $1,000 per month or less because the standard of living is different in those countries. The reaction: more and more millennials start to work for themselves, as a side hustle or main profession. The number of self-employed workers could triple over the next few years, some believe. Millennials don't want to work that hard to climb the corporate ladder only to be sacked when the company relocates its computer department to India, for example. The biggest advantage of large companies, job security, has evaporated. So if you have little job security already, why not try it as a self-employed worker? Maybe there is a possibility to have a better work-life balance too. Shopify is of course one of the best ways to develop your own store online and become self-employed in that way. Can easily start as a side hustle and you don't need a lot of technical knowledge. I think that every traditional mom-and-pop store will be online within 10 years maximum, and a lot are already today. Amazon, AMZN, is not always seen as the best partner in this process, since it has a lot of data which it can use against its own sellers to take the profit. The platform can become a competitor by undercutting the price of the most popular product of third-party sellers. Shopify is often a better solution there, and Amazon had to acknowledge that too. The market sees that as well, and that is the reason why Shopify's stock price trades at a high premium. Amazon too has had a negative P/E or a sky-high one for many years now, but no one will argue that it is one of the best investments ever. I think that Shopify may well be the next Amazon-like investment. All the signs are there: a social trend, constant innovation, users' comfort, facilitating people to make or save money, and a full integrated system. I could go on, but I think you understand what I mean. Maybe next year, when I review this first potential multibagger again, I will have to say that the stock has lost 50%. That is always possible in a bear market. But I'm pretty confident that over the long haul, 10 years or more, Shopify will turn out to be an investment that people think about. If only I had. The rest of the article will be devoted to some events that have happened over the last year. Citron Research: as a long-term investor, you should wonder if anything has really changed. I definitely had a look at how Facebook's Cambridge Analytica scandal could affect Shopify. Citron Research's Andrew Leff made a whole lot of fuss around it. And I have read the article thoroughly, because as a good investor, it is always better to read the opinions that challenge your beliefs than those that are completely similar. Source: Twitter. And I have to admit that Leff is a somewhat dramatic, but very good writer, technically spoken that is. He has a compelling style, builds well-structured texts and uses all rhetoric tricks that suit his case. But for authors with such a compelling style, you should always be even more critical and examine if the article is fact or fiction. As in most cases, you should follow the money, and Leff has made his short thesis for Shopify a few times now. He announces when he shorts, but not when he covers. Does it mean that he doesn't have a point at all? No, but I think he doesn't look at the complete picture. Shopify's affiliate marketing program is indeed quite aggressive, but it is not a Ponzi scheme, as he wants you to believe. Taft exaggerates also when he brings in the retirement letter for Shopify sellers who want to quit their ordinary job. And he clearly overstates the consequences for Facebook in his second short argument, as Facebook's earnings have shown. But Shopify dropped quite dramatically over the fears, as you can see in the chart of April. And it has not completely climbed back to those highs yet, making it maybe an opportunity to buy or add to this stock. Shopify YoY earning results on May 1st. Shopify released its Q1 2018 earnings. The total revenue of Shopify went up by 68% YoY to $214.3 million, easily jumping over the analysts' expectations of 59% growth. Just to show you how incredible this is, in 2015, just a few years ago, over the whole year, Shopify's revenue was less than this quarter alone. I don't think this pace will slow considerably over the next few years. Of course, because of the law of large numbers, it will slow in percentages at a certain moment, but the trend is there. Because of the add-ons Shopify is building out impressively too, Shopify Capital and Shopify Shipping, for example, the company has many levers to keep its flying wheel going. Most investors identify Shopify with its subscription-based revenue. And that revenue grew 61% to top $100 million. This was because of the rising number of merchants joining the Shopify platform. But the real star of the earnings was the Merchant Solutions, which grew by 75% and is bigger now than the subscription-based revenue. Solutions are a rather low-margin business, but they are indispensable for most merchants, shipping, transactions, etc. I think that this shows that Shopify will keep expanding its services to be able to attract even more merchants. BR. I have already mentioned in several previous articles that I think are. For Shopify, this means certainly finding more and better merchant solutions. Unite is Shopify's annual conference for their developers community. It was held last week, from May 7th to 9th, 2018. The motto was, "Retail is not dead, it's changing." Making retail accessible to every merchant supports a thriving economy. Source, Shopify.com. As with most developers conferences, there is a whole lot of technical details. I will highlight the most important announcements. If you want more details, then you can read a more elaborate summary here. A first news item that was announced is that marketing will be made simpler and more integrated. This is important for users but also for investors, since users can stay inside the system and again more revenue for merchant solutions can be generated. Shopify also announced Ping, a free mobile workspace for merchants that can be used for conversations with customers, for marketing overview and so on. I think it is a great way to know what shoppers really want, and it can give the Shopify merchants an edge for customer focus. Kit is integrated in Ping. It is a tool to fulfill advertising campaigns through Facebook and Instagram ads and email using the information the merchant has gathered with Ping. The downside about all this is that at this moment these perks are only announced for iOS and not for Android. But I guess that is just a matter of time. Another improvement is the new discounts formulas. Merchants can make new actions like buy 2, get 1 free, or discounts for bigger orders, buy more than $100 and get $10 free. There was also an announcement of a new tab. Source, Shopify.com. There are a few other developments, such as easier returns and a clearer mobile view of the order at checkout. But all in all, I think the general conclusion is that Shopify keeps expanding its universe and that it does everything to keep merchants and their clients in their universe of related services. That is exactly the thing I expect from my investments. Building a cash position for an acquisition? There was a remarkable passage in the earnings call. This is what Amy Shapiro, Shopify's brand new CFO, said. Finally, our cash and cash equivalents and marketable securities balance was $1.6 billion. This is about $650 million higher than our December 31st balance of $938 million, as we raised additional funds from our offering of 4.8 million shares in February. Now I'm thinking that one of the first questions I may get once we open up the call for questions is about plans for these funds. As I said at the start of the call, one thing we are not lacking at Shopify is opportunity. And like the rest of this management team, I'm a big believer in the strategic benefit of optionality. So we will ask you now to stay tuned on that front as the year progresses. Source: photo by Sharon McCutcheon on Unsplash. I don't know about you, but for me this is a clear sign that Shopify is on an acquisition prowl. This is not new in Shopify's history. It has completed 6 acquisitions before. One of those was Kit in April 2016. It was brought into the ecosystem already a few months later. Other acquisitions were Start Studios in February 2012, a mobile app developer, Jet Cooper, a design and user experience agency in August 2013, software developer Bolt Made in October 2016, digital product studio Tiny Hearts in December 2016, and the drop-shipping service Oberlo in May 2017 for $15 million. That is the only disclosed acquisition price, as far as I know. The hoarding of cash and the mysterious announcement make me think that Shopify is in search of a bigger target now. But it has proved in the past to be a prudent acquirer, first examining what it could need and only after that process make a precise acquisition. Let's wait and see on this one. Conclusion: although Shopify's stock price has had some big ups and downs, the stock is up considerably, beating the S&P. The social trend, the age, the entrepreneur, and the financial results point in the same direction. Shopify is a premium company. Its stock price sports a premium price as well, but let that not hold you back from buying. If you don't want to miss any Potential Multibaggers installments or updates, feel free to hit the follow button. In the meantime, keep growing. Disclosure: we are long shop, FB, AMZN. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from Seeking Alpha. I have no business relationship with any company whose stock is mentioned in this article.